Um, gonna do trend review. Alright, so basically the market was moving. Oh no, this one I got in the morning. One second. Uh, anyway, this move was occurring in the morning. So when, as you can see, the market's trending up. This is the 1,000 tick Dow chart. Anyway, so it started going and it reacted a bit, but as soon as it broke out here, it basically I got you get in the pullback right here, and you get a nice move up. I forgot whether I got this or was it something else. Oh yeah, this was it. So this happened in the morning. This trade was it was pretty early. It was like 8 something. Anyway, that's when it was very clear, very very clear that the opportunity was right here. There were other opportunities as well, but I'm looking for, there has to be a correction and then expansion. But the other ones that I see, that I don't really. There's one right here. This opportunity. You have a rally. You have somewhat of a contraction, and you have continuation. Then it starts moving sideways. So you have these opportunities present themselves. Actually, it was after this area was taken out because I want to see some type of contraction. Because the contraction can be many things, but a lot of times it's the reaccumulation, even on smaller time frames. You'd be surprised. Like this bar over here, this is actually buying. This is buying. This one here is buying. This one is the follow through, and you can buy the pullback. This is also pretty nice. You have your rally, you have a pullback, and 1, 2, 3, 4, 5, boom. But contraction has to be multiple waves. So this one you had 3 waves. Anyway, so price went up here. Then you had this. This was the change of behavior. Now this thing is not very pronounced, so it's very difficult to determine if it is a change of behavior or not. But this change of behavior is the highest down volume in multiple down waves, as you can see. Then bang, the selling comes in. You see, this selling did come in, but a lot of times you have to be very careful because when they pull back on heavy volume, but they're going to a support area, it just results in more buying and a continuation. So is it a change of behavior? Is it not a change of behavior? Is it just a pullback? That is dynamically determined. You can't say that just because there's a heavy volume down wave, that there's going to be a change of behavior. There's multiple indications that need to be pieced together. Obviously, after this continuation down, trend changed. The trend changed right here. So after the trend changed, it started moving sideways, and this right here, selling on 99, more selling, comes up right here was the LPSY, or whatever they say, but basically it means lack of demand. Lack of demand, pulls back, retests on effort, and there is a slight upthrust. Right, I think there's pretty sure there's upthrust. Let me see. This is 26287. No. 26282, and this is 26283. So it upthrusted by 1 tick, and there's other things you want to detect, like inability to press. Like if you see it's very boxy like that, and then you have your low end. 1 second. You have your low end close right here. That takes out this minor range with follow through and comes down in 66. or 62. And basically, I'm not really sure why this didn't. Oh yeah. Now I understand. Yeah, I didn't catch the upthrust there because it was like it was going higher. So this is a little difficult to detect. But then after that, it basically broke, went up, broke, and this box or this range that formed here, this is where the upthrust occurred. That was very clean, like a clean upthrust and a downtrend. Very nice. So you have your upthrust. This also, I think this was 207, 203. Upthrusted by about 4 ticks, followed by a thrust. Boom. Same thing happened here. Upthrusted by 1 tick, followed by thrust. Upthrusted, followed by a thrust. Upthrusted, followed by a thrust. This one was a harder upthrust because I don't want to play with this because it's like when it rallies and forms, like some type of support, it's much. I'm not sure what's going to happen, especially when it comes down to this level. Like, is it going to spring? Blah blah blah. So I don't want to deal with that. The interesting behavior here was an upthrust, the thrust, and then this sideways movement. So what is this sideways movement? All right. Remember, you can read this behavior. The support level that was established was here, right? So now it goes to that area and is unable to go higher. This is absorption. It goes down, they try to go up, absorbed. Try to go up, can't do it, can't push it, can't, down. This is just like on the bull side, you will see that some people will say, no, this is not absorption, this is lack of demand, right? I mean, whatever you want to call it. If I put it on the bull side, then many of those, if I flip this chart upside down, then, folks will say it's absorption and it's taking out the highs. But in the case of lows, it's the same thing. It's absorbing demand over here and not letting the demand go higher. So this behavior is absorption. That's absorption. But the difference is the absorption on the top side is absorbing supply. This absorption is absorbing demand. You go to the support level, support level, obviously they're going to try to spring and rally, right? So what happens when you can't? It's absorption, absorbing the demand so that demand cannot go higher. And the trigger is right here. You can see these triggers, like, watch. You see the trigger here. See that bar? Again, you see the trigger. Right there. See that? You have the trigger here, follow through. You have the trigger here, follow through. The follow through is very, very important because in my mind, the way I view follow through is that it means price acceptance. And I don't know where I came up with that though. Just because the thing is, like, if it reversed, it would be price rejection. So what's the opposite of price rejection? It would be price acceptance. It didn't reverse. In fact, it made another lower low, low close, another lower, another bar that's lower. See? So it must be price acceptance. Over here, this was a very clean up thrust, and again you see the same type of similar triggers. See that? This one was a nice easy one because this was more classic. Absorption goes down to a new range, moves sideways, unable to rally, does an up thrust, and that's the thrust. It's another trigger. And this one I could have caught. This one was a little difficult. This is very difficult to catch systematically, because when they start rallying, it messes things up. You have to. There's too many conditions when stuff like this happens. But this one is very clean. They got to rally down. You have a clean sideways movement in a bridge. You have an up thrust. You have a thrust. Breaks the low. Very nice. And then it goes down and down and down. Right. So now demand comes in. The first evidence of demand is obviously demand itself, which is 5,200 contracts. This is the biggest up volume since here. So that's 1, 2, 3, 4, 5, 6, 7. It's in 7 waves. And by itself it means jack. You have to be able to weigh supply and demand. 52 up, 12 down. It's more than a 4-to-1 ratio. 52 up, 12 down. Biggest volume in 7 up waves, lowest volume in probably, I don't know how many down waves, right? So the change of behavior occurred here, and this is also known, this is a sign of strength. And I know some people will show that diagram and say, oh, this is the sign of strength on the right hand side after you have a climax and secondary test, and then you have a sign of strength and a spring in the middle and all that. But in reality, that's not what happens. Okay, that can happen, but it's not required to happen. In reality, this is buying from the lows that occurs. And like over here, the sign of weakness, this was the sign of weakness. So this was more, I guess it's more classic, because you had the climax. That's the biggest volume in the entire trend, right here. So you have that climax, which represents inventory going into the hands of the public. Then you have the sign of weakness, which represents short positions. The climax represents exit. From the CM's perspective, the climax represents exiting his long positions. What is this? The sign of weakness or change of behavior represents establishing short positions. So the idea is, let's say he accumulated down here somewhere. Let's say he accumulated 7,500. So as price climaxes, he's unloading for a profit. So he bought, now he's selling for a profit. All this is profit. So after he sells his inventory, he wants to make money again. He does that by establishing shorts. Here he got rid of his long position. Here, which is like how you can view a climax, right? High prices. That's basically very high prices, relatively speaking. Where he offloads his inventory. Now he's at zero and has sold everything or close to everything and has made a profit. Here he establishes the short positions. So he's out of his longs. Now let's establish the shorts. Now this is what number? To watch this. 50. Fuck, I can't even see. 54. This number is like 50. I can't see, 52, I think. Somewhere along the way, he's exited his um, somewhere along the way. I mean, there could be redistribution and all that, which basically occurred right here, right? So he's out in this heavy selling wave, this climactic wave, like over here, offload, redistribute. Now start looking at at the at the waves. Here's the climax, right here. Then establish the long positions right here on the change of behavior, and we'll see if they got out here, right? So 52, somewhere around here you offload and then drop. So that basically what I'm saying is climaxes and all of that, they can have multiple meanings, but one very common meaning is if you buy low, then in the buying climax would represent the best prices for you to sell your inventory, because it goes up into an overbought, and it goes up without correcting. It's just like really strong, so you get the best prices to offload. Then after that, if the CM can short, when he shorts, he obviously sells a lot, and his print looks like a sign of weakness. Okay, like this could have possibly been the first evidence we have, because there's selling here. But I'm not really sure, because the trend hasn't turned, and it's all guesswork until you can see the story, and we'll see. Anyway, so this was the opportune time to take the short. Then the trend change, and you have the long opportunity. This was really cool because you have 101 long. Look at how much you have in the sell. 12. It's like a 9, almost 9 to 1 ratio. And boom, breakout, goes higher, buy the pullback. Then again, these guys did it one more time, but this is kind of shady, because this has some. It looks like someone sold and someone reaccumulated here, right? So I'm interpreting this as like some type of reaccumulation here, and then there's no selling pressure here or here, and it goes high. So, but the thing is, like, if you check the higher time frames, this area was a very not a good area to go long, right? Like, this is where the redistribution occurred, right? That caused this down move. This is the redistribution. This caused this down move. They're going into that same area. So if they distributed here, there's chances they want to distribute at the same level. It's not a coincidence that this here is at the same level of this, and there's a thrust. That's not coincidental. They're selling in a certain area. So that's why I'm a little confused over here. Like, what's really going on here? But we'll see what happens. And again, opportunities will present themselves. So, all right, now moving on to point and figure. Like I explained to you guys in the video yesterday, what I thought this was doing was basically possible reaccumulation and going on a springboard. The point and figure, by the way, like, point and figure with volume is badass. I know Wyckoff didn't use it, but it is badass. The indication was very. Where's my? Damn it. Anyway, now I don't have buttons. I don't have the buttons. Anyway, so over here, you see this? This volume came in here. This was a bullish indication. Now, when the red bar occurred with this kind of volume, I was unsure. But after that, when the bull bar came and took out the red bar, to me it was like, these guys are not giving up, and there's a problem. You know, the bulls are still taking control. Now you see the volume tipping off. See that? The volume tipping off. Look at that. Okay? So the way I interpret that is the force of the supply is weaning. The force of the supply is weaning, and then you had increasing demand come right here when the market was on a hinge, and then it did this shit. So now when it's over here, you see again this type of action. This can this is now interpreted as price again hinging and the force of demand diminishing. Okay, now how do you know if it's a force of demand versus a force of supply? A lot of times you won't know, but this, you see, this was not visible in the bar chart, but it's visible in the point figure. Look at this. Before the breakdown, right? Before the breakdown, look at the volume that came in, but it's only apparent in the point and figure because I can't see it in the wave chart. Look at this red thing right here. Look at how much volume came in. Someone knew something up here. Okay, someone knew something because they sold a high. Someone definitely knew something. They sold a high over here, you know, and that was a major tip off. Okay, price is at a high, so they're selling. What are they doing? Selling the high. Then it starts going sideways, which means that demand is done. And their distribution is also coming to completion. This was the major tip off. After that, there's a breakdown. Right there. Right? So this was definitely area of distribution. It's the markdown. Starts going sideways. And again, volume indication right here. Selling pressure came in right there. This right here looked like good demand coming in, but not in the face of this break. It's possibly just like selling into a rally. So they're selling the rally here and breaking here. Then it starts rallying here. The volume gets weaker. Look at this. From this to this. And then you had your indication that the sellers are back right there, where they broke the support area with good volume, right here. How do I know that this is good volume? I know it because I'm just comparing it relative to the recent past. The recent past, meaning this block. So this is good volume. It's a nice break. Then it starts moving sideways, and bang, break again. You want to see these breaks on volume. Okay? So over here it breaks, then it starts hinging. See this? Tightening. This is hinging. Then breaks, then hinges, then breaks. Then hinges a little, then breaks some more, then hinges, and now finally the force of demand reveals itself. And there's more volume here. So this is where they take control. So they buy. Then it starts hinging. When it starts hinging, it means that that particular force of supply here is gone. So the force of supply weakens here, and the force of demand takes over. Now, could this have broken down? Hell yeah, it could have. You know, just because it's hinging doesn't mean it has to break out to the upside. The major trend is down. It could have sold it here, but it broke to the upside, and you want to get in on pullbacks. And what's nice is when it breaks to the upside, it does so on volume. Okay, that is very important. It's not small volume, it's big volume, relatively speaking, bigger than 1, 2, 3, 4, 5, 6, 7, 8. 8 bars. So that's why the idea of getting on the pullback after that is it's just a price volume breakout, which itself is an edge. Okay, there's cause, there's a hinge, meaning the force of supply has evaporated, and then there's a breakout. Okay, same thing here. Like over here, the force of demand evaporates. Look at this. And then you have a price volume breakout. Okay, force evaporates. Look at this. Evaporates, and then there's a breakdown. So that's how you wanna think. This is real Wyckoff. Even though he didn't use point and figure with volume, I'm using the same principles for just applying them. I don't know why he didn't use them. I think he just was enough to basically just check the bar chart. But from what I've seen, you can apply it on point and figure. In fact, it's actually easier on point and figure than it is on a bar chart. That's what I'm seeing. Like, it's a phenomenally good tool for buying pullbacks after breakouts. But yeah, still you have to understand trend. You have to understand the other principles, etc., etc. Anyway, so this was the opportunity when it was hinging, demand, buy the pullback, and you get something. This here also is decent volume, and it's moving sideways now. But as we saw later on, that you had a reversal here, and there's selling volume coming right here. Whew. So what are the lessons learned? A, you want to look for hinges. B, you want to look for price volume breakouts. C, you want to take a look at the background, see if there are rallies and consolidations. And I think that's about it. Alright, take care.